Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab chat? Thank you, Marty. How we doing in YouTube? Okay, thanks, Stephen. Well, good morning, everybody. Welcome to Traders Lab. I'm your host, Tom B. Thanks for stopping by. This screen is about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis for structure. The stream is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. If you're in YouTube, there's a link at the bottom so you can access the Trader Lab as well as the resources in the Bookmap Discord server. This stream is really about auction or market mechanics, how the market works, why it does what it does, and of course, using structured trades to attempt to get an alignment with the market at times. The idea of a structured trade is to give you a template or a blueprint of processes that you can reverse engineer to make into your own setups, if you will, and then vet them. Find out when and where they have an edge. The business of trading is not a predictive business, and I think it's very important for retail traders to understand. We're not trying to predict what the market's going to do. What we're trying to do is get in alignment with the market, then see that random event, which is based on the interaction of the participants at that specific moment in time, which is absolutely uncertain. Over time, does that behavior with that structured trade give us an edge? In other words, does it have a positive outcome in a random distribution? It operates very much like gaming does, like casinos operate. It's anchored inputs. That means it has to be exactly the same because the market is random at any moment. So something has to be consistent, otherwise you can't measure it. Most retail traders go about and believe that if they can predict what's going to happen, that's their objective. The reality of our business, at least from my experience, has been we can't predict anything, but what we can do is have an edge. And that's how casinos operate. They don't predict the cards coming out of the deck or how gamblers play the cards, and they pay to gamblers. However, over time, they extract the dollars from the gamblers in a random distribution. That's our business. So Trader Lab is about helping traders build out the business side of trading for potential career development. And while past performance is never indicative of future results, and we all take losses, we all take stops, we all have bad days, whatever can happen happens because this is the business of trading. It's no different than a professional poker player. They have winning hands, they have losing hands. It's just the way it is, and sometimes they bust out, even though they're profitable. That's the reality of our business. Psychologically, that's very difficult for us because we are attached to the outcome of every trade we take. It's almost like it's a measurement of who we are. But the casinos see it as overhead and cost of production. It's really different. So putting aside our psychological needs and our primal wiring of fight and flight, which is another element that comes into this, we are discussing here the business of trading. So welcome to the Trader Lab. I hope you find this useful. And remember, there is a link in the bottom of YouTube if you'd like to visit Trader Lab. Take advantage of resources, the 60 PDFs of structured trades, a library of webinars, and of course the Trader Lab community, which is a series of community of like-minded traders who've come together to leverage their collective experience. We all need to get better all the time. You're never done. I'm doing this going on 45 years. I'm always trying to get better, and I certainly can get better. The randomness of the market, makes you think somehow you can always get better. And I'm going to say, even professional athletes, they practice. I practice, I review streams, I do replays. I'm always practicing because I'm trying to get better. And it doesn't matter how long you do this, whether you're successful or whatever you are, your relationship to the market. If you're a competitor, and this is a competitive business, you're going to continually try to get better. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab, and you're all welcome to visit. The other thing I want to say is there are many different ways to do this, many different time frames. The process you're going to see is generic. The fractal, as I think of them, or time frame as you think of them, is where you're going to kind of find your groove or your comfort. And that's also where you're going to find your edge. And this is the job of the trader, where it's like, if you want to think about this, I don't use indicators, and the only reason I don't use them is my quote indicator is participant behavior. Indicators really take price-based derivatives and they translate. It's almost like Google Translate, you know. So I speak the language. You can learn the language too. And the idea of speaking a language of the market is to be closer to real time, and then using a high tier order flow tool like Bookmap to really get down into the micro structure. And if we can do that better than other traders can, then maybe that gives us an edge. And then, of course, like everything, the outcome is still random. But maybe if we can enter a little bit better, manage our risk a little bit better, get risk neutral a little quicker than the other guy, over time, maybe that adds to our edge and maybe contributes to our longevity and ultimately creating a stable, though volatile, environment to operate in. So as you all know, now today I found is a hard day to trade. It's very two-sided, very conflicted. If you remember yesterday, we opened higher. It hit our target on the upside. If you remember that, in fact, let me see if it's still in here somewhere. Yeah, yesterday's high, this was our target, if you remember. So we had longs in the morning up to here, and then shorts and 50, what was it, 5205, I think, or someplace, was our target on the downside. So, and there's yesterday's low. These were our targets. So basically, we went from yesterday's open up to the high of the day, and then after it turned around, and I target the high of the day. I don't sell the high of the day unless I'm lucky, and luck, you know, it's nice, but that's not, you know, that's an element. But so once it failed off of here, which was the upside target, then the target was this, and that's yesterday's low. So we wrote it up and down. It's a very nice day in TraderLab. Now today, of course, is a different day, and every day is unique. Now we closed towards the low yesterday. This was yesterday's settlement. So today we had a report come out at 7:30 Central Time, and that changed everything around. So that was a surprise, and of course, that's why the market is random. Now I'm going to show you some levels so you understand. This was yesterday's settlement. This is the ETH volume point of control. This was yesterday's volume point of control. Now, what these are retail prices. If we know 5305 might have been too low, this is the retail price from yesterday. In other words, highest volume. When I say retail, I'm thinking of shopping. And when you go to the store, high volume is where, if you're buying your can of tuna and it's $1 a can, sellers sell it to you at $1, you buy at $1, everybody's happy. That's high volume, and that's the retail price. So that's kind of the concept of the auction. What the auction does, it does this process in all time frames or fractals. And this is what a consolidation is represented by. A consolidation is really just where, if we have buyers in a rotation, where does the buy volume taper off because there's less buyers? And on the south side of the high volume, when it's on sale, where do the sellers say, you know, I'm not selling it anymore because the buyers are consuming it, and then they raise the price back up and we come back to equilibrium or retail. This is what creates these rotations. So we see this all over the place and in all time frames or fractals. These levels on the side over here are higher time frame levels or intermediate time frame levels. So when you see, and these are called micro composite levels, and that's just a fancy term for intermediate time frame. But why would we even be concerned with these? Because the market operates, as you know, and think of it in different time frames. I think of them as fractals. They're not represented by time. They're, other than RTH, which is time-based. Everything else in between is really a function of volume if you're using a tool called volume profile. And the high volume is a retail price. So in the intermediate time frame, this is retail. In the yesterday's RTH, this was retail. So this is up here is a higher time frame than this. In the ETH, this is the retail price. So what it was kind of telling us, the 50,205 was too low from yesterday-ish. Remember, horseshoes and hand grenades. Yesterday's RTH, too low, maybe. Yesterday's ETH low, or today I should say ETH low. And at the time, this is all what was going on until the report, and then everything changed. Okay, so when everything changes, then you have to kind of dust yourself off. So now here's the RTH open. We are above the ETH retail price yesterday and all this. So we're opening higher, but inside of yesterday's range. So this sets up a couple issues. We know we're in a contested market. Yesterday was an outside day. So it is the fight, everybody's getting abused here, equal opportunity abuse. So I posted in the Trader Lab this morning, two-sided trade. Be careful, be patient. And of course, careful and patient is not a bad idea. Here's the ETH high, and here's our open. We're opening near the ETH high, and we've left everything behind. So this is how the day starts, at least for me. Because now I have to kind of try to get in alignment. So let's look. RTH open. So I'm looking at this, and I have to tell you, extremely conflicted. Now, I know a couple of things are possible. Like, of course, anything's possible. So let's remember that. If the market opens higher, what might happen first? Well, in the Trader Lab, we have a couple of, there's all old saying, and I always say it at the top of the stream, market goes up to go down, market goes down to go up. Yesterday, the market went down. Market goes down, and if the shorts are in the market's going to potentially go up. But what might I see first? Well, for me, I'm anticipating selling in a downward rotation and then a potential squeeze to take out the opening swing high and then continue on our merry way towards the ETH high and wherever. So that's my plan for today. So my first trade. Now, what I'm going to share here, I'm going to share my trades, some of my trades. And this is an aggressive trade. And it's not necessarily a trade anybody ought to do. But I'm going to give you some concept of what is going on here. So let's take a look. So RTH open here and ETH high here. So I know I want to go here. So what do I going to do? Am I going to just buy the open to go here? Or if I see selling, I might take a short and then turn around and get long for this. So if you're in Trader Lab, you might not take the short. You might be waiting, and it's all subject to a plan. If you're in Trader Lab, by the way, guys, if you're visiting on YouTube, in Trader Lab, it's not about what I do. Sometimes it's like any other trader. Sometimes what I do, I go, why'd you do that? Well, and no, typically it's because I'm following my plan. And the thing, I'm always following my plan or a plan for the specific condition of the market. And I have a number of plans. In Trader Lab, our primary plans are directional. In other words, taking a directional move. And then when the market changes into rotation, it's a different plan. So we have two basic plans in the Trader Lab. So just so you know. So market opens higher. Now I'm going to show you this. My first trade was a short. And not necessarily a structured trade, but I'm going to show it to you. So this right here is called the developing volume point of control. It sets at 0 at RTH open, and it's migrating higher with the buyers. So I'm looking here, and I'm seeing selling iceberg. So this is absorption. So as the market is going up, I'm seeing the sellers. So these buyers are being absorbed. So I know possibly if I had the buyers here, and this is delta, and I'm seeing buy stops, And remember, the market is short, and I see exhaustion. So this is the stop and iceberg detector. So what I'm seeing is selling icebergs, so sellers, and I'm seeing buy stops, buyers. And that shows up in the delta. So I know here, and I don't know anything more than that. I know here that there's absorption. There's more. Now, this is very sensitive at the open. Now, look, I'm into this thing going on 1 second. Okay. So this is not anywhere where anybody ought to be doing anything. So I have this and I see my break. So I know now potentially this is too high. Let's watch it. Break again. I took a short. Now, right here, coming down, and I have buying icebergs and I have sell stops coming out. So I got short, I got a scale, and I'm thinking to myself, well, it's possible that we're going to gap and those sellers might come back. And if we can't get back above here, and here actually, and here, then we might, and this was, I call this is almost like the Hail Mary pass in football. We might come back here. So it was really, I thought of it like, this is really like wishful thinking, but I have a trade. So I took the trade. I just follow a plan. I don't think a lot about it. But so I got my scale, and now I see this. So right here, let's open this up. So here's what I see. I see sellers here. So what I'm seeing here is the absorption up here. So that's my sell. So I can't get short there because by the time I blink, I'm getting short here. So my stop is here, my sell is here. I ride this thing down. I get risk neutral, which is job number one, and I'm going for the long ball. Who knows? So here I see my seller. Now, this is going to be the opposite of what's up here. Right here, I have my buyer, absorption. So I'm looking down here and I see my seller. So right here, I have a buyer. Let's just look at this. And what happens here? I have an iceberg. This buyer was absorbed. So I know right here is too high. I have a seller here. I'm just giving you some ideas. And I'm looking for continuation down. In other words, let me see the selling. And this is like you start cheering a little bit. Come on, Seabiscuit, Remember, buyers were absorbed. Here, going lower. What I see happen here is the same thing that happened up here. Absorption. So I know now that the last place my sellers took control was on here. And this is a consolidation, and it's a microstructure. You can see the high volume. Inside of consolidations is where the chop, chop, chop takes place. This is where I'm not paying that. Yeah, but it's on sale. Yeah, but I don't know. And there's absorption. So it creates that little node. And that's a micro high volume structure. This is what an inside of a consolidation is. And all a consolidation is this rotation. Well, because I have an order flow tool, I also know which side. Now, I don't know how it's going to resolve when I'm sitting here, right? As soon as I break below it, I know it's absorption. I break below. Now I have another seller. Why don't I just keep going? You're going to ask. Here's why. Look what's right here. By volume. I see my seller here. Now, if I don't keep going and I break the other way, now I know these guys were absorbed. There's the volume. I'm in a microstructure. I'm just showing you market mechanics. And I know this is the last place where the sellers were. So I bailed out of the trade right above here, right here. Trade's over for me. Okay. So that was a short. That was very exciting. So let's look now. VPOC migration. Right here, if the market's going to go, and I have mid and VWAP. Right here, if the market's going to go down, it's going to do it from here. Let's look at this in a fractal. You notice how the market works. If it breaks above high volume, it can reverse. If it comes over high volume, this is resistance. Think of the concept. Think Russian dolls. fractals. That's why I exited this trade. This is now a higher time frame. This yellow line is for all the volume that is developing so far today. And these little ones are inside it, Russian dolls. So I use the microstructure to help me. And it doesn't mean I don't get turned upside down, take stops, has nothing to do with it. It helps me manage my trades because I understand what happened here. And I don't know what happened here until I break away from it. And then I have this other location. You see, so I'm using this. It's too high. I break below it. If this is too low, I break above it. If I don't hold this area and I break above it, this, you know, the old thing, resistance becomes support, right? So let's watch this. VPOC migration, same concept. This now is resistance. This is resistance. Resistance, if I don't break down from here, I break up, this becomes support. It's a variable high volume node. All I do with the yellow lines is I mark them because they're more meaningful as the day develops. The little microstructures that I'm using with the white lines, this is just so you can see them, so you can see what I'm using. Now I'm going to take these off the chart for now. I don't think I need them anymore. No, I don't. Hold on. Let me get rid of those guys, and we'll go from there. So when I cross above here, this sets up a long resistance is this, where the absorption is, right here. So I'm now coming back. So if I cross above, and remember what my objective was here. But until I find my buyer, I'm trading the short. And this is an aggressive trade. It's counter trend. It's not necessarily anything anybody should do. I'm just sharing it with you. So we come across. This sets up a long, and this is the target. Right here. So now this is too low. Let's remember this, and let's just see the behavior. Let's make a noise here. Hold on, I got some alert going off here. Yeah, okay. So long side, target, and then we got to see. Variable high volume node. We'll look at this. So too low and too low. So this is an area of support. This is an area of support. It was very choppy. I found it very annoying. I'm going to tell you. This is typically, this here is a support area, and I look for longs. If I come up to a target, which is this, so this is my target, remember. So the long was when we cross, and if you didn't get it in here, you could get it here on VPOC migration. It's a long to the overnight high, and I always give it a couple ticks. Then you're holding. So this is my support. Takes me out. Okay. Now here, actually, it got very choppy for me. So right here, I got taken out. I see my seller. I'm below this. So I'm in a state of what's going on. But this is still relevant to me. Right there. So you can see the location. Right here, I'm looking at it here, and I see my buyer. I'm at my location. I took a long here to come back here. I took a stop. Okay, just telling you. And the teeth are starting to chatter, and I'm getting very annoyed. I'm going, wow, this is choppy. So I said, okay. I still think the trend is up, and I have this outside location. I should have left the line on here, by the way, which was out of this. I get VPOC migration. Let me mark this for you. So we have two-sided trade, bang, bang. So I took a short. So I took a lot of stops today. I'm really not thrilled about the whole thing. So this was, so I got this one was okay. Got that. Got taken out of my runner. Put another one on. Took a stop. VPOC migration. Now I know my support is here. This drops down. This becomes resistance. I break. I pull back. I take a short. And I get taken out of it. Okay. So I get stopped again. So I'm going, all right, hold on. See this? So again, back here, I see the absorption. So I go to I look at this. I'm saying this is really nasty, and I'm not thrilled about it. It is a hard thing for me to trade. This is not a good market for me. So, and I'm saying, and I posted in Trade Alert, this looks like mean reversion market. In other words, outside in trading. So outside in trading. So, you know, and I find that out because we're crisscrossing over this. When you're trading both sides of high volume, it is really a big consolidation developing, and you don't know until you know. You know, hindsight is always very clear in these times. This is an outside edge of an intermediate time frame. So I have to be conscious when I came out here of this level. So it's just a mess for me. Okay. So now we come across and I'm going, well, are we going up or down? Where do I come back? I come back here. What had happened over here? Last time we're up here, there was absorption. So we take stops out. And then I'm saying, well, are the buyers going to come above here? Or are we just going to get the stops, icebergs, and selling? So I'm thinking mean reversion. So now I take a short here and I'm trading back inside. So I'm thinking, and I'm just I'm not thrilled. I'm just telling you, it's not my thing. So I get short here, I scale, and this is a target down below. Okay, I'm trading inside of a higher time frame fractal. So and you could see this is two-sided trade, and it's miserable trade for me because I don't do well in this. Part of the problem for me in this context, which is mean reversion, in an uptrend, is do I trade both sides or do I only go on the long side? So for me, I'm just trading this, trying to trade it, and I take a lot of stops in this condition. So I come outside. This is an outside edge. Let's look at it. Now, I don't know where anything's going to happen. The higher time frame locations are just areas. They're not walls. And a low volume area in all time frames or fractals, the market, they're not the walls. They are areas that we can pop through and then come back through and mean revert. And in a higher time frame, this is the same as that in a higher time frame. So in the developing daily time frame, this is like your retail. That's your retail. And the outside edge is out here, which is similar to the outside edge of a consolidation. This is an outside edge of this, and it's an outside edge of this, and that's an outside edge of that. And see how these things work? These are all consolidations. So in a higher time frame, this is the outside edge of a higher time frame. This is the high volume area of a higher time frame. So in these consolidations, high volume, high volume, high volume. Intermediate time frame, low volume, high volume. So this is the fractal. So you got low volume, in the bigger time frame, low volume, high volume. So I hope that makes sense. So we come outside. So I'm looking at this. So if I'm short, I'm looking at this. And what I'm doing is I'm looking here. I see my buyers, they're absorbed. I see my sellers, we break low. I got my sellers looking good, Lewis. I'm at my location. And here's the thing about anything. It can do anything. This is my next location down below. So I'm looking, if I get under here, I got this. Well, not so much. I see my buyers here. What I need now, so these guys are absorbed, which I don't know until I come above. Once I come above this micro high volume and this one, right there is support. So I got micro support in here. So this is a support, okay? So you can see it. And when I break high, these buyers now are my support. So these guys got stuck. They were absorbed. There's my buyers, and I have buyers above them. If these buyers like this price, if we pull back, they're going to activate again. That's what creates this. Let's just look at it. We check. The sellers take a shot here. No bueno. They are absorbed. So what you have is absorbed. This guy is here. They're still in control. Buyers get above these sellers. Buyers are here. If we're going to fail, we're going to take those guys out and get under here. There's my sellers. All that right here is the conflict. I break high, it is either cover your short or get long. And the target is this. It's called mean underline reversion. Let's just watch. Back to here. And then where? Here. Variable high volume node. And this is resistance now. So these are structured trades, and these are nasty. I don't like them. I mean, if there was a way, maybe there's so many times I've said to myself, I'm just not going to trade it. But guess what? That unfortunately or fortunately, that's my job is to trade this stuff. So I'm going to label this because this was too high. Remember? And where's the volume? It's right there. So this is resistance in a developing daily time frame. In a microstructure or fractal, this was too high because my buyers were absorbed. Remember why? Buyers absorbed, sellers took control. And then if you look at it from all these different angles, what happened down here? Sellers got absorbed, buyers took control. Back to retail, back to variable high volume node. This is my resistance. And so is this. Different time frames. See the behavior? Let's watch. Where does it come? So if you understand market mechanics, and I'll come up and look at your questions, and I appreciate your patience. I hope you're getting something out of this. If I get to real time, I'll definitely go there, as you guys know I do. But if you're interested in real-time narration, in the Bookmap Discord Trader Lab community, and if you're in YouTube, there's a link in the bottom of YouTube. There's real-time narration up to 5 hours of real-time trading. So you can see how this develops as it's developing in real time. And they're pretty good. I mean, they're real good. This is and the goal of Trader Lab and this stream is to help you see that maybe there's a way to understand how the market works. That's different than being indicator driven. Does your indicator tell you that this is important? Well, we know it's a swing low, but does it give you a location to get activated and take a long? Does it tell you here is resistance and you need to be scaling or getting out or whatever you're going to do here? Does it tell you if you get your scale here that you can buy it here? If you didn't get long here on the retracement, when you come down to where these, get over here. See, this is absorption. That means the buyers, the passive side, took the other side of these guys. If I come back here, I'm anticipating, are these buyers who absorbed here, are they going to be here waiting? Go, oh, really? Back on sale? Thanks. And there's my buyer. This is another long. And where would you go? Here. Why? Mid VWAP. Here's another little piece for you. a little tidbit of interest. The volume point of control, or it's called the developing volume point of control. You notice how it's too high, too low. It's oscillating. What that's showing me is, of course, two-sided trade. The other thing it's showing me is the VWAP and the mid at this point are in the same location with the VPOC. That is balance. That is mean reversion trading. Okay, that's outside in trading. So for me, depending how you think, and I did hit this, are we going to take this out and go higher? Always a lovely question. I hit this. Is this the low? I don't know. Is this the high? I don't know. How do I operate in this? Mean reversion, stressing the word mean. So it's outside in until we break out one side or the other, okay? So that's my trade. So this is a specific trade plan, and I always say if I had a choice, and I do of course, but I like to say it's my least favorite plan because I can get turned upside down pretty easily. In other words, if I sell this and I think I'm going lower, I have to cover. So I'm thinking primarily longs, but I'm two-sided. So I'm just trading my setups. And that's why in Trader Lab, it's really about a trade plan, and you can't overthink it because I know for me, I don't know. So I'm always in the term I like to use is clueless. And it's not ignorant, it is open-mindedness. In other words, I don't close my mind on saying, I'm only getting long. Now, if my plan says you're only taking longs, then I'd skip the shorts, But what I'm doing is I'm reading order flow, and I know what happened up here, and I know this is too high over here, and I know this is too low over here, and I know if I come back up here and I can't get here, and I had my absorption here, and I had my absorption here, and I'm below this volume here, and this is my micro high volume there, and let me show it to you. This, just to make you a little nutty, because I don't think I make you nutty enough, let me just show you a little something more, a little more advanced. So this is too high, right? Overnight high absorption. Inside of this little fractal, this chop, 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 you see this there where this white line is. This is a consolidation, right? And this is a low volume node right there, that little outside edge. If I break under it, it sets up, this is like an outside edge of this volume. So if this gets too high and the volume dries up, there's less buyers. That's logical. And out here, it was on sale. There's the high volume, retail. If this price, micro, is too high and I break below here, then in the next fractal, this might be too high. If I come back, now this is too low, then I can check what was too high. And I have there, variable high volume node. I have an outside edge here, and I got high volume there. So I know if I come out here, this trade will fail up in here, especially there. So let's look at it. So there's your long. Now, where do I come? I come back here. So if I'm taking a long, I got to scale here. I got to think about this, and then I'm looking for that. So that's this trade. What happens here? They're absorbed. There's my icebergs, and I have to get above these sellers. These guys were absorbed. So basically, I know the sellers took on these buyers. They ran out of gas, and I broke below. Sellers took over here. If I come back here and I have my buyers, I'm looking over here and I'm looking over here because I'm going to see sellers. What I'm actually seeing is absorption. So what absorption is you get your buyers and they get trapped up here. Sellers took over. And here's my node. So I come back to this high volume area. If it's too expensive, they're going to leave the store. Then where do I come? Back here. And if I break under here, then everybody who's long under here, it gets taken out. So let's just see. I found this very hard to trade. So what I did here, what I was doing was I started trading both sides of this thing. And don't break here, I cover, I come up here, I'm under here, I sell it again. I'm telling you, I was trading like a whirling dervish. I don't like it. And then I broke under and got these stops. That puts this on the next level for me. This. I come under it. Now right here, I'm seeing the buyers. This is absorption. So I see my buyers. This is the absorption. What I do is I just manage the trade because I'm confused. Quite honestly, I'm confused. And by confusion means I'm conflicted because it's two-sided trade, and that messes with me. Don't mind telling you that. So I'm short, and again, I'm back on the we got them now trade. I'm looking for this again. I'm back on this idea. I'm saying, okay, we can't get over the overnight high. We're trying. The sellers are absorbing the buyers. We've had a couple shots on goal. So I'm trading to this. So I'm looking at this. So I have a few ways to handle this. What I do is, now I have my own trade management process. So let's look at this. This is important right here. So, and I see the buyers start coming in. So I'm looking here. This is telling me they're being absorbed. And you could see what you're seeing here is the icebergs and sell stops coming out. So, okay, looking at, to me, it's going lower at this point. But this puts my antenna up because I have the sellers and I have passive buyers. That's what this is showing me. So the antenna goes up. So what do I have here? And this is kind of how I do it. And I'm not saying this is good. I mean, it just is what it is. Too high, structure. Too high, sellers. This buyer was absorbed. Sellers are in control. Buyer starts here. Too high, there's the test. Sellers in control. I see absorption. Sellers in control. Micro high volume here. Sellers are in control here and in here. Okay? Right here, I get my micro high volume structure, and I think it's going lower at this point. And what happens here? I take out these guys. So they were absorbed. As soon as I see that, and as soon as I come up above here, I punch out of the trade. Trade's over for me. And then it goes lower, right? So comes down here and then this. So I have nothing here. So I had no way to get on the long. I'm going to come up see your questions. It's really, this is really nasty. I'm just going to tell you. And then we have a long. How we doing? Tough day for me. Hope you guys did better than me today because it's just been, felt like I was in a Cuisinart. So we come up. Now, right here, I don't know. All I know is it's time to be out of my short. I don't know that, and I am thinking two-sided trade mean reversion, but I didn't have a level down here. No. So for me, I can read it to manage it, but at this point I did not have a sense that we were going to mean revert again. So because we're making lower lows here, right? So we come across. Once we come across, then I'm thinking longs. And remember, this was resistance, right? So right here, I come up, I take out the ETH high. I get my absorption again. I'm going, what is going on now? But I'm over the ETH high. It's going on 9 a.m. And 9 a.m., we have something called the IB30, which sets up the first hour high if we get there. So right in here, and I think I posted this in TraderLab, 5,300 was a target. This is a target coming up. So once I break above the absorption and I pull back to it, which is the overnight high, let me come back to what this looked like at the time. So I have my level here, which you know is the absorption level here. Once I get above that level and I see my buyers, now I get more absorption here and I have a target here. So, and there's resting liquidity. This is all posted, I believe, in Trader Lab. I can't remember, but I think so. And this now is the retail price. I have VPOC migration. So right in here is a long in the Trader Lab. This is a structured trade. So this would be a long, or this pullback in here can also be an area to observe. It's micro high volume. This is developing high volume. This is called VPOC migration. So this was the target. And then let's watch here. This right here is important. So we pull back to it, we bounce, we break below. Now I have my single, and wait, let me give you some more targets. This is my next target. There's some more up here. Can't say if we'll get to yesterday's high, maybe, but doesn't matter. So, but we're in a two-sided configuration, so it's rotational trading. So this is a long in Trader Lab. This can also be a long if it's part of your plan. It is for me because the absorbers got run over. So the buyers came down, and now the shorts have their buy stops up above the overnight high in this volume. That's why this can be an add if it's part of your plan, and then 253 there. So that was the target. So now it is just rotational trading. And I will tell you, I started scalping in here. So VPOC migration. This is the same structure as this and the one below it. This is a Trader Lab structured long. This is advanced. This is a structured trade in Trader Lab. It's a long. It's called VPOC migration. It's in those 60 PDFs if you're interested in those. This is the IB high initial balance. It has over a 90% probability either the first hour's high or low will get taken out. So we're looking for that. And that sets at 930. So this was a target coming up. So the long from here, risk neutral, take this out. And then this is an outside edge. I see absorption here. And I'll tell you what happened to me. I got really messed up in this. What I did here was, so I took, another scale and I'm going, and I don't know where the market's going to go. I see absorption. I pull back. I know this right here is an obstacle. I pull back. So now I'm going, well, I want to add here for a continuation trade. So where's the stops? I had absorption here, and I know this is a swing. There's possibility of stops under here. And here's my high volume node at the time. VPOC is below me, and this is an outside edge. Remember, low volume zone. It's created by the speed. So right here is an outside edge. I'm going to label it for you. Now, part of the joy of trading is everything is random. Let me make sure I'm in the right place here. And we don't know what's going to happen. So I've accepted that. I don't like it because I'm emotionally attached. But the fact I have feelings has nothing to do with the business. You can feel anything you need to feel, but what you do is what counts. So I pull outside, I pick this. There was absorption here. Notice there's 1,000 buy icebergs. All these icebergs are buying. That's absorption. So I have it there, there, there. So I am looking now for mean reversion. And mean, what's the mean? Now, this is kind of subject to. Remember, what happens if the price gets too low and it goes on sale? It doesn't stay here. It'll revert back to the high volume, which is up here and here. And I have this. Right now in the microstructure, this is too high. I'm going to put a little line across here so we don't lose where it is. Remember, this is trading in fractals. Let me just get this on here for you. Okay, so this is too high. That's where my sellers came in. That's where my absorption was. So I want you to see where these things come from. Now, when this comes back here at the time, I don't know. I do know there was absorption, and I can see the icebergs. So if I'm hanging in here with a long, I know I got to get above here. But being a mere mortal, if I see this, I'm not going to punch out here because we might only do this and then get through it. Now, I am in alignment with a level. See? So, and I don't know, I'm totally clueless. So there I see my seller. So I know there might be a test. If I don't get through this selling, then I can come back. So let's see, just look at the behavior. So I have this. I have what's called IB extension. This is called range extension. And then we have two trades in the Trader Lab. One is a counter trend trade called the IB failure. It is a short, which I think takes a little bit of, testosterone and whatever else you got floating around. And then, and potentially it's back to here, called mean reversion. And that would be counter trend. And remember where our outside edge is. It's down here. So what might happen is we might only come here, or if we get under here, we come here. That's the trade. It's counter trend. And if you're trading with the trend, this is not your trade. It becomes a exit. All subject to your plan. Let's look at it. I took the short, and I will tell you, my teeth chattered, and I was thinking, there's that debate you have in your head. But I know the market is two-sided, and I also was leaning against that. So, and this is advanced, and I don't recommend it. I'm sharing with you what you might, underline, might be able to figure out if it's, if you find that you can relate to it. See where the low volume node is? This is a distribution. So I know, so I have absorption here. I see my seller. Now right here, it's a suspect. When I come back here, I have to get over this absorption to go higher. I get my seller. I get VPOC migration. I'm extremely uncomfortable. But I have this. So this is advanced. I don't recommend it, but I want to show you because it might be a trade somebody might think about. I break again. These sellers are in control. The buyers up here got absorbed by the sellers. So sellers, 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 break again, pull back. I take the short. It's extremely aggressive. And I'm going to tell you I, debate with myself with these things. Come back here and test. So I'm thinking I'm going to get stopped out, which I think every time I put a trade on, by the way. And so it's scale. This is the target. And what happens? No bueno. So let me show you the trade management. So I'm going for that. And there's the debate going on in my head. But here's what I know. My low volume node is here. I break below it. That suggests to me if this, and that I might get back to mid and VWAP. So I'm coming down for this. And then I'd be looking for a long back to here. So I'm trading two sides, which I do. I'm not saying it's such a good idea. So I have this, which I have to mark, variable high volume node. So I have a couple targets. And there is a bit of a couple ways to look at this. So if this is the retail price, this is too low. The market has a tendency to come back and check. So it'd be target here, target here, target here. If it worked, well, and I got under here, which means I fell out of this distribution. So the logic of the trade is to come back to the previous location that is too low, which is this node aligned with the variable high volume node. I hope this makes sense. Can you see the logic of the trade? So I manage my trades. Let me show you the trade management. Then I'll look at your questions. So going south, feeling good. Got you now, right? What do I see? Well, I have a buyer here, absorption, and I see all these icebergs buying these sellers. And I'm going, well, that's not so good. So what do I get here? Absorption right here. And my next target is here. So I'm going, well, there's my buyer. I see absorption here because my sellers get below. So what I know is right in here was where these guys were absorbed. I have to get below these guys for this. I see my sellers. These guys were absorbed. I'm thinking I'm not looking so bad here. I got my sellers. I got my sellers. Now, absorption was here. I am below it. Now, the thing I need here is more sellers. Okay? I need more sellers. And what happens now? And I know here I had sellers also. So I have sellers, but I also had some buyers. They were absorbed. That's what the purple thing is all about. I'm sorry. Is that it? Yes. Sellers. So I have sellers. So I'm thinking if I'm under here, I'm okay. These guys are absorbed again. And I realize, of course, these guys were absorbed here. If the buyers, the passive side, thought this was a heck of a deal, and this is the way I think, and I have my buyers above, and now it's a fight between the buyers and the sellers. And if you look over here, you see this distribution. It's a consolidation. Too high, too low. So I need this for my trade to hit its next target, for the sellers to overwhelm the buyers who were absorbing over here. And what do I see? Buying icebergs, buying icebergs. Let's go. And so I'm going, come on. You ever talk to the market? Buyers are here. Buyers are here. Sellers are trying again. What's happening here, and I'm reading it in the order flow, is I'm going, come on. I mean, this is what I'm doing. You might as well cheer, for your team. And now the buyers take over. So I bailed out of the trade. What was happening here, and this is how order flow helps you, is down in this area, we had our sellers, you can see them here, and they were being absorbed. And then they gave up. And then the buyers took control. As soon as I see this, I'm out. Okay? That's just the way it worked. So that's life in the fast lane. Anyway, how we doing, guys? JB's asked me a question about this red line. What that is a iceberg order, and this following the market around. So that's what that is. It's showing it as a out there, looking to get filled. Tanya, mean reversion is basically a return to the mean or the median, but that nomenclature in the business is, it's a reversion trade. So it's mean reversion. So if we call this the mean is the high volume. And that reversion process takes place in all time frames and fractals. This is actually mean reversion right here. There's the high volume. So this outside in to there is mean reversion. In a higher time frame, this is mean reversion back to there. So that's the mean. So what it is two-sided trade is really annoying. What is hard about it, at least, it's really hard for me with this kind of trade, is where's the outside? And that's hard, I think, for all of us. At least it is for me. If somebody has a better way of doing it, let me know, because I'd like to do better with it. I take a lot of trades in this. And it's also where I can get chopped. You know, in other words, I take my loss. Most of my losses are in mean reversion because I can see something like this, and let's say get long, and then it makes a new low and takes me out. You know, so I'll take more stops in this condition. I prefer to be, you know, writing it down than trying to pick the outside. It's very hard for me to do that. I mean, I do it, but it's just where's the outside? That's always the question. So if you got, let's look at it this way. Suppose you saw this and you say, oh, that's a buyer. I'm going to get long, you know, here. And then it makes a new low. You'd be stopped out. And then what do? Then you see your buyer here. Do you buy it again? See, so that's what makes it really hard. I'm just saying this. So for me, it's not a good, you know, it works overall for me, but it just getting there is really annoying, you know? I mean, look at this. So let's go back to our microstructure. There, I'm going to put a little line on here, is our high volume. So this is like, this is a consolidation. This is the outside edge of the consolidation. There's the high volume right there. So what does that tell us about this? This here is a consolidation. Too high, too low, too high, too low. Let me put a little box around this. I want you to see structure. And yeah, this is brutal. You know, I don't like it. I mean, I don't like it. I don't have to like it. It has nothing to do with what I like. I find it very challenging. That's all. So this is basically the outside edge of this consolidation. There's the high volume in the middle. So once I get this breakaway and a breakout, if I come back here, and there's resistance, you see, isn't it a joy? So I got resistance here. This is the mean, and now I'm looking for it to pull outside. If I think the trend is up, then I have to get long. If I think I'm going to be in rotational trading, I could be selling this back to here or getting long here back to here. Let's see what it does. See where it comes? So this is a long against this back to here to here. There you go. Didn't even see it. So, but this is how this works. And then this is resistance. So you have outside too low. And right now, this, remember this? That was the short. Then this sets up, once it breaks high, so you look at what's going on here. This is too high. This is too low. You could just be trading this box. Okay? If you wanted. Totally up to you. And what's this? See if this doesn't look familiar, guys. Now, this is not, I got to tell you, this kind of trading, you know, I say brutal only because you need to be reading these, like you're asking me about this red line. Yeah, this is a iceberg and he's moving it around. If you come out here somewhere, where is he? There he is. You see him? So this guy, he's showing us, hey, I got this. Come over here. I want to sell this to you. What happened up here? See if this doesn't look familiar. You see the selling up here? That's absorption. So I got my buyers here. I have alignment with my structure. Really annoying. I get my sellers. I come back where? Right there, which is there. You see it? That's a short to here. So you've got longs to here, to here. We break out. Let me just get my brain back in. There's your absorption. There's your break. Here's your box or your consolidation. There's your test, right? That's the short I took, right? I just want to make sure I'm in the right place. Here's the long. Here's the test. Here's the break. Where do we come? Back here. And we can pop it and take stops. And that's okay. If it takes the stops above here, and then you see exhaustion and absorption, then it's a fade. This is mean reversion trading. It's brutal. And there's your short. There's your test. That's your short, and it's back to here. That's your long. Up here, there's your break. There's your short. It's back here. And then you're going back to this. And maybe down here. You see what I'm saying? This is what's called mean reversion trading. It's a specific plan. And I'd like to throw a shoe at it personally. Do you have questions, guys? Thanks for your patience. Getting the question about green horizontal lines. I'm not sure which lines you mean. Green lines? Which green lines are we talking about? So, guys, this is, you know, wish I had a better answer for you on this, but it is what it is. So, in Trader Lab, we have a couple of primary trade plans. Two, actually. I have more, but it's on right. There's some days I said, you know, this is tradable, but you got to understand the context, and that's the problem for most of us. When you're using canned indicators, they don't differentiate. If you understand market mechanics, you'll understand that we're in a two-sided configuration, so it's outside in trading. You really don't want to be trading here. You want to be trading towards it. Now, we come outside. Notice where we just came. By the way, this is a target down here also, and it's a variable high volume node. Now, this is a very tricky day to trade. Notice absorption here. This is not a trade recommendation. Let's just see what it does. What do we know? We had absorption here. We had buyers here who got absorbed on that side. So sellers absorbed, buyers absorbed. If we can get above the volume, then we might want to observe it to potentially come here. If we get below here, then we're going here. So this is an area to observe, not a trade recommendation. This is very squirrely trade. So there's nothing here yet. Let's watch it, okay? It's a suspect. That's all it is. High volume is there. So that's kind of your level to observe. These are not trade recommendations. In this configuration, I get abused regularly. Let's watch it. Questions, post them while we're waiting on this thing to ferment. Are you guys tracking? You get something out of this? Now, this doesn't mean anything, right? If you got long, you have to get risk neutral because this can fail like any other trade, okay? So here's what you need to know. These buyers were absorbed. We need to get above these guys. They are absorbed again. So we had our sellers up here, and it looks like our sellers are still here. So if we can't get above here, and we just got to watch what happens here. This is why these are, of course, not trade recommendations. Listen, I take stops. It's not one of my favorite things because we don't know where the outside is. This is the hard part. We have buying icebergs here. So this trade would not have succeeded if you had your stop right here. Let's see it. Sellers are still in control. Do the buyers, these guys, come back in and take these guys on? Doesn't look like it. So let's see. It has to clear this. it doesn't, then this. Very hard to trade this, at least for me. So let's keep an eye on this now. Here. And this. It's so two-sided, it's really hard. So you break right to it. This is what's potentially next here. I'm not immune to, if I take a long here and take a stop, I'm not immune to looking for a pullback and maybe shorting for here, but that's pretty aggressive. I don't suggest that for anybody. Really. 14 had the absorption, which is up here. So these guys were absorbed. So if we return, we want to see the behavior in here. So this is where the absorption was. This is an area that might be too high, so we're going to watch it. So 14 to 16 is kind of an area to observe. Let's see what happens up here. Because this is where the sellers took control here and here. So 14 to 16 is an area to observe. We'll just watch it, okay? These are not trade recommendations. This is a very hard trade for me. I don't know about you guys. I find it a hard trade. Very two-sided, and it's basically very contested, you know? It's kind of an area. See what it does here. When it's like this, I just tend to hang out. I'll scalp around a little bit, but I don't do well in this. So I just get pretty conservative. So I can look up here and I can see what happened over here. So I know in here, either I'm going to bounce off of this area or I'm just going to revert back to here. That's what I know. Let's see what it does. When I trade in this condition, I got to tell you, I get very aggressive with trade management. You know, as soon as I see, if I don't see what I need to see, I punch out. So I end up doing a lot of trades. Um, and my broker actually does really well. So we're in this mean reversion thing, you know. See, this is where we were looking for the long to come back here. And then you come outside. So this takes this out, and we cross above, and then you get this kind of thing. So it's hard. I have a real hard time with it, which I know I've been saying, but I want you to know I have a hard time. There's other things I don't have a hard time with. This one I do because I can't find the outside effectively. I mean, what's the difference between this and this? You see, very little. That's why I take more stops, because if I got long here, I'd take a stop here. Then I see the reversal here. Well, if I don't right here, if I don't come down to here and I cross over, then I got to be thinking about getting long again, and then to there. This trade was to there. This, so where's that outside? That's a challenge with mean reversion for me. I mean, why didn't we come here? I don't know. So that's the target. So you're seeing mean reversion. You're also seeing, at least for me, why it's hard for me. This looked like it right here, didn't it? You guys have questions? How are you doing in YouTube? Yeah, trading PE, it's very hard. You know, I mean, I can't sugarcoat it. It's just what it is. Um, this is what I find so difficult, mean reversion trading, and I always talk about it. Sometimes it's very structural. It's like you'll come out here, outside edges, low volume zones, and then you'll revert. This is what we're trying to do is this. And we came out a little bit under it, which is okay here, trying to go here. And then we take this out. Because to me, right here, all the pieces were here. I had the absorption. I saw exhaustion. I had a buyer here. And this was created out to the left. So I was basically taking stops out 349, and I had buying icebergs. So this set up a nice long here, which failed. So then I come out here and I get more absorption. Then you break high. So, this could be another long. I didn't narrate it, so it doesn't matter. I'm more interested in, I'm looking at this thinking, well, does that mean this? What has to happen in the narration is if this, then that. So if this is absorbed and I see my buyer, if this, then that, and that means there. If not, if I break below, then what? Well, if I don't get back above here, then this. When I get back above here, it actually flips it around again. So you'd be flipping here to get back to this, and then back to this. So, but it's hard. I have really. So what happens to me and stuff like this is, I'd get long here, I'd take a stop. I'd be looking here. Should I get short? I come across, I get long. I put my stop under here, I go here. It's the same trade as this. So what I do is I keep doing the same thing. But when something like this happens, I have to question myself in the sense of, is this the wrong location? And is this the next location? This is the next location for a long. It's a structured trade in Trader Lab to go from here to here. That's a nice trade, but it is what it is. This is a nice trade too. Didn't work. That's Trader Lab. These are structured trades, and some work, some don't. And in mean reversion, it'll make you stand on your head. It's a hard trade for me. So we get an iceberg sitting out here in the ether. Okay. These are algos. You can see them bracketing algos. They don't necessarily do anything except make noise. So this is your mean reversion from here to here. And then this is resistance also. There's typically stops right above here. So you really got to be, if you took a long here, this is where you're going. And then it's wherever. And then it's trade management. So what happens for me in these is even if I get on the thing and I get my this is the primary target. And then you're going for more, which would be out here, perhaps, to the low volume outside edge. Or this node over here. So you have, if you want to think about what's going on here, we came under this low volume node, which kind of messes things up a little bit. That's why this was a nice long and a target. I think we had the short, right? So this was a nice long, what it did is basically picked everybody off and then it went. Then look what we're doing. Then this is the outside edge here. You've got a high volume node there, which is what this is a potential target. And then you have low volume here and then high volume there. So these are like sequential targeting. Low volume, high volume, low volume, high volume. And then maybe another target up here, or maybe we got the high in for the day. It's not my job, to figure that part out. It's just trade management. So what do we know here? Buyer, the absorption, buyer, buyer, buyer. We got our sellers here. They were absorbed. Buyers still in control. This is resistance up here. We might only get up into here. IB, we don't know. We might only come up here. So it's trade management. Let's look at trade management ideas. I can open this up. Sellers were here. They were absorbed by the buyers. Buyers are here. Now that you will get taken out of these things, it's just the way it is. So I got my sellers here. I need to clear these guys. If I can't clear these guys, then we're going to rotate. This is our next obstacle and outside edge. So let's watch this here. Sellers were absorbed by the buyers. You could be trailing under here. So the long was actually, I think, a pretty good trade. I mean, it took a stop, and then you would have to put it back on again if it's in your plan. I just take so many stops in this because I'm going to be trying for these outside edges. And I think if you're going to trade mean reversion, that has to be part of your plan. Really good risk management, very good self-control, keeping track of levels, and acting accordingly. Right here, we need more buyers, and we need this here would be where this trade fails. And it'd be over. That's just it. We need to clear that. You know where it came from. We can clear this. We can keep rolling to here. And this guy is sitting out in the ether saying, please, questions, guys. Been a kind of a frenetic day. But this is Trader Lab. The green lines. I'm still not sure what green lines we're talking about. So I'm sorry about that. Cocobolo's asked me about the IBF. The trend's up. It's mean reversion outside in. You can trade two sides. IBF, it's up to you. I mean, this is the mean. If you get short here, this is your primary target. I don't think so. The trend is up. So the choice becomes, remember, this was a target, right? This is where the buyers were. There's the sellers took over. This trade could be over. Or, I mean, where are you going to sell it? Here? To there? I don't have a short. All right, put it this way. The better trades are the longs at the moment because the trend is up. This was a good long. This is a good long. This is a scale. This is support. This is resistance. And we're in two-sided trade. I don't see this quite the same way as our standard IBF because we've been trading through it. So the IB is not as material as the auction structure to me. The auction structure is the high volume node. If I'm leaning on something, it's not this, it's this. This is based on time, and it's a statistic. It's done. This is the current information. This is the outside edge. If I get short, it's going to be here. This was a target. It could be, you could use that as a target. Doesn't matter, but it's not. What is sitting here? Nothing. It's filled in. If a low volume node was sitting here, it's a little different. But my low volume node is here. This is resistance, and it's resistance because of what happened last time we were over here. Next resistance is up here. So I look at these fractals and think Russian dolls, right? This is high volume, so it's resistance. And also my sellers took control here. So if I come back, I'm going to look at it, that's all. But no, this is not relevant to me. It's interesting. This is the more current information. So for me, it's a target. So would you want to see what I'm doing here? I'm going, notwithstanding this thing, outside, in, outside, in, outside, in, and then whatever, So this is rotational trading. It's just mean reversion, annoying trading. Hope you're getting something out of this, guys. This is Trader Lab. Some days, are easier than others, and today was a tough day. So please give a thumb up if you're visiting in YouTube down at the bottom. Also, there's a link down there if you're interested in visiting the Bookmap Discord Trader Lab community. There is no cost to access the Trader Lab. You can download 60 PDFs of these structured trades so you can study them and reverse engineer them and find your groove. In the Trader Lab, it's about building out the business of trading, learning what the business is all about, how it works, how you might get in alignment with the market at times, trade management, risk management, psychological management, and self-management. Also, it's a community of like-minded traders who have come together to leverage their collective experience. Doesn't matter what you're doing now, it works, bring it. If you're waking up trying to fix a process, make it better, and you're constantly tweaking, tuning, I have a term for that I created. It's called Trader Groundhog Day. That's where you wake up, you get excited, you curve fit, you wake up, and it still doesn't work. And by the way, we all have winning trades. That's not what this business is about. It's about edge. It's about randomness. It's about understanding that you don't know. It's self-control and statistics. The way you take a random environment and make it tangible is the same way the casinos do. The casinos only play games that have a statistical vetted edge. They don't change the games. We are changing everything all the time based on the last outcome. They stay in the current space. They are here now. They're not in the last trade. They're not fearful of the future. They are here now. Can you be here now? Or how about come to Trader Lab and you can find out what other traders are doing to develop the career side of this business. And past performance is never indicative of future results. Everybody has to do their thing and find out where they fit in all this psychologically. You might be able to find that if you visit Trader Lab. And again, there's no cost for that. Please give a thumb up in YouTube. On the way out, it helps the stream. Come to Trader Lab. Take advantage of all the resources. There is no cost. Plus, there's a lot of additional trader education in the Bookmap Discord server, stocks, options, crypto, order flow with a high tier tool like Bookmap, algorithmic behavior, swing trading, and much, much more. Thanks for visiting the Trader Lab today, guys. Look forward to seeing you soon. Trade safe. And if you had a hard time today, it is the nature of the market that sometimes give us a hard time. It transitions, it changes. You need a trade plan so you can narrate the market when the conditions change. you should have a plan that changes with it or stand aside if that is your plan. Remember, this is a business of statistical edge. If you don't have an edge, it's better not to participate and sit with the gamblers. I always think it's better to sit on the house side of the table. Thanks again. Look forward to seeing you tomorrow.